Hey guys, welcome back. This is Stock Broc. My name is Brock. Today I am diving into Cisco Systems, a stock that I definitely didn't think I would ever talk about, but they recently just reported earnings and I kind of want to break it down a little bit, go over if this is an opportunity here, and maybe tell you if I'm going to buy it or not. So the PE ratio on Cisco is 26.55. Currently at a price of $69.30. Was down a little bit in after hours by 8 cents. Not that bad. And basically since IPO back in 1990, the stock is up 89,000%. Last 5 years, stock is up 63%. So I think that's lower than the S&P 500. And then on a year, it's up 52%. So 1 year, people that are buying it are up 52%. It's pretty good. So they reported quarter four revenue of $14 billion, up 8% year over year, capping off fiscal 2025 revenue at $56.7 billion, up 5%. So this is an established company. It's not a fast-growing company, but maybe it's a turnaround play. Non-GAAP EPS came in at 99 cents, beating the high end of guidance. While GAAP EPS was 71 cents for the quarter, gross margins remained strong. GAAP at 65.7% and non-GAAP is 68.4%. So for a company like this, it's expected to have strong margins, but those are pretty good margins for Cisco. All right, so year over year performance, quarter four revenue up 8%. Full year revenue was up 5% as mentioned. Quarter four product orders climbed 7%, demonstrating the healthy demand and product lines. Annual recurring revenue now exceeds $30 billion, rising by 22% year over year, reflecting Cisco's push into software and some subscription models. Some opportunities for Cisco is their AI infrastructure. Currently, they have orders from hyperscale customers surpassed $800 million this quarter, bringing the fiscal year total to $2 billion, doubling their original goal. They also have security and observability. Security grew 117% year over year, and integration with Splunk is driving further growth in analytics and observability. Global demand is also another opportunity for Cisco. Product order growth across all geographies, Americas, Europe, Asia, shows robust growth globally. All right, so let's always talk about the risk and the concerns. Networking was a weak spot for the company. Revenue from the segment declined 3% as enterprise customers show slow spending cycles from those customers. Cisco's traditional networking businesses also faces stiff competition and margin pressure, while demand for new AI products must offset this slower growth. And macroeconomic uncertainties. I feel like this is a risk for pretty much all of the companies, including global trade issues, which could weigh on certain verticals and delay consumer and customer spending. And as mentioned, Cisco is trading at a P of 26.5 with a dividend yield of just over 2.3%. With a strong cash position, recurring revenues, and stakeholder returns via dividends and buybacks. Cisco appears reasonably valued at this moment relative to other large cap tech stocks. But you can't really compare Cisco to certain large cap tech stocks. Definitely not the Mag 7, but it's starting to pick back up again. I haven't really followed this company too much, but this is pretty impressive so far. Especially those benefiting from the AI tailwinds. For investors seeking stability, income, and exposure to enterprise tech and AI infrastructure, Cisco is an attractive play. It's not going to be a high-growing company. It could be a slow grower and steady compounder, but it's definitely not something I'm going to invest in. Not financial advice. The company's strong balance sheet, expanding AI and security businesses, and continued dividend increases make it appealing long-term hold. However, with concerns about networking growth slowing and fierce competition, expect moderate, not explosive upside from here. That's a wrap for today. Just breaking down Cisco's earnings for quarter 4. I'm Stock Broc. If this was helpful, hit the like button, comment, subscribe. Thank you. Peace.